Welcome to ShortView Trading, your morning market hit for Tuesday, 16th of June. What matters today for traders? Well, yesterday we got another reminder of the Fed's resolute determination to shore up asset prices. That came in the form of another Fed announcement at 2 p.m. Eastern Time in the States, 7 p.m. London time. This one related to further details on their corporate bond buying program. Prior to yesterday, the market suspicion was the buying of individual corporate names would be limited, with most of the corporate bond buying focused on ETFs. But yesterday's announcement cleared that up, with the indication that individual names will be bought meaningfully as well. With that, those prices jumped. If you look at the price on your screen now, the LQD. The LQD is the ETF that tracks the high-grade corporate bonds. It jumped sharply at 7 p.m. London time, 2 p.m. Eastern time. There was a similar move in the junk index as well. The JNK that I'm showing you on the screen now is an ETF for the high yield corporate bonds rather than the high grade, and the high yield picked up some of that as well. Of course, the Fed is buying fallen angels, those that have fallen into the high yield index since March 22nd. And importantly, what those two represent is a proxy for risk premia for equity prices. So the corporate bond market added fuel to the equity market rally that was already underway, given how oversold it was at the start of the session coming out of Asian trading hours. So the question is, where does that leave us? Well, over the past week, many of our short-term models have moved back on to buy. Naturally, last week there was a lot of risk aversion in prices. The models are picking that up, as well as what we've seen over the last day or two. The short-term risk appetite scoring system is now clearly on buy. Technically, markets are just oversold, but some models aren't quite there yet, like the put to call ratio. Interestingly as well, medium-term models had a very clear message last week. Across the board sell signals suggesting a change in medium-term 1 to 2 month trend. That makes us a little bit more cautious about jumping on longs, particularly after such strength during yesterday's trading session. For full details on how we're playing this, please see today's daily rag, available to subscribers and on the website. So what are we watching today? Well, in terms of macro, plenty going on. US housing market data from the NAHB Housing Market Index, added to which retail sales will be fascinating out of the States. And over in the Eurozone, we've got the ZEW index. In terms of events, Jerome Powell is up on the Hill. This is the first of his two-day reports to Congress on the semi-annual state of monetary policy. Lots of Q&A after that, but also maybe some hints on how thinking is evolving. And the Fed's Clarida is also talking about economic policy later on this evening, London time, 9 p.m. So that's it from us. That's your morning market hit for Tuesday, June the 16th. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Facebook, and or Twitter. Thank you. Stay safe and trade well.